Dwight?
Yeah, yeah, it's being streamed to YouTube.
Okay, cool. Hello, everybody. Welcome to the webinar. Start in just a moment. Give everybody a chance to get settled. Hey, Dick, how are you? Nice to see you. All right, so I'm going to go ahead and get started. I'm going to share my screen. So welcome to today's webinar, the third of a 4-day live trade execution webinar series subtitled How to Capitalize on Monster Moves in the Markets. My name is Mark Shawson, the Pattern Trader. So over the past couple of days, I've kind of shown you how I kind of use price patterns and price action as a weapon to make a lot of money in the markets. Now, when I say the markets, you can use this this price action trading methodology in any trading markets. So whether you're trading the oil market, gold, Forex, stocks, any market that is a open, high, low, close, something that you can observe a chart pattern, you can trade it. Even cryptos. Cryptos are tougher because they've got these seismic moves and kind of a limited history, but you can trade everything according to the plans that I gave you. Now today, I'm going to share with you my book. I'm going to give you a link to my book, which basically goes into detail my 4-step layered methodology, where the first thing I do is observe the trend, whether something's in an uptrend or a downtrend. Once I kind of see the trend, then I try and observe a pattern that is also going to direct the traffic, tell me where this thing's going to head over time. And then I look for what I call my insurance day bar, either a Q reversal or an inside day bar. And then I layer all of those 3 steps with an execution plan, which then requires me to put a buy stop outside the high of a market that I'm looking to buy, or a sell stop under the low of a market that I'm looking to sell. So today I'll go through a couple of other examples. And again, this is live. I'm showing you everything in absolute real time. So I'm going to go through, today I was in and out of the markets. I did a lot of things. I basically bought some Caterpillar puts into a higher opening. I got out of my shorts in the NASDAQ. I did a bunch of things. I ended up with some call options in JD. I'll show you the chart of JD.com. I was actually in the 80 calls. I doubled my money and then waited for a pullback, and then I layered it, put on some calls at the end. I bought some 81s that expire in 2 days. So it's this is a high form of gambling to buy these call options, especially so close to the expiration. But I think that JD will continue going strong even into tomorrow. And then I ended up with these FX positions, long dollar yen, long pound yen. Some of you will say, well, I don't have a stop loss. Some things I don't put a stop loss in, and that's my own kind of way of trading. When I think, I want to look at a big move, I want to give this run room, and I just kind of observe the levels. Eventually I'll sneak in a stop. So I'm long the dollar yen and the pound yen. And we discussed a little bit briefly why yesterday. I'll kind of do a recap today. So the charts that I'm looking at, I actually bought this crazy stock in the aftermarket right now. So this is a stock called Oxygen, OCGN. It's a bio thing. And I don't know, it's like I just looked at these levels. It's starting to break above these levels. It had an inside bar. And so I just bought this thing right now in the aftermarket at $9.20. Sometimes these low price stocks, these biotech stocks, they go crazy and you wake up the next day and it's up $4. So I just bought it on the close. It just looks like it's breaking out. It's retesting these levels, and it's kind of a fun thing. We'll see how that works out. But the chart that I'm kind of looking at today is the Australian dollar, US dollar. Now, during the pandemic, the Australian dollar turned around, did a massive seismic U-turn, and I think laid the groundwork for a long-term uptrend. So, the first thing when I open up a chart, this one's, obviously it kind of goes this. And so it's been going sideways, and then you have this above here and this below there. So now the question is, where do we think it's going to go from here? So when I kind of break apart these price action, price patterns, what I see is an upside down or inverted head and shoulders. So a head and shoulders is a price pattern, which looks just like a man or woman's left shoulder. The head is the head, and then you have the right shoulder, and this is what is a head and shoulders. And this is a bear price pattern that basically indicates a bear move, indicates that the next move is going to go lower. It's a reversal pattern. So basically, by definition, a reversal pattern is that leading up into this pattern, the market was going up, and then we can surmise that once it breaks out, it will go down. So we call this whole head and shoulders a reversal price pattern. So an inverted head and shoulders is simply just an upside down version of this. This would be the left shoulder, that would be the head, and that would be the right shoulder. And so this is a little bit different, whereas leading into the pattern was a downtrend, and then coming out of it, we would then surmise that it's going to go higher. So this is basically what I think we're looking at long-term in Australian US dollar. So you have this large inverted head and shoulders, and there's the neckline. And you can see, as with any trade, this is a weekly chart where each one of these price bars represents 1 week in time. And typically what happens with, any formation, prices normally bust out and then they retest. And what I like about this retest is that you can see it's putting on this little double bottom right here. So you've got this inverted head and shoulders, upside down head and shoulders. Now you got the double bottom. And with the word bottom in here, it suggests that over time, now, you have to be patient. Dollar has been kind of sideways for some time, but I do think that this thing looks like it's percolating. And certainly if we get above this level, which looks around 75, that would pierce the neckline, which is simply a line drawn through this double bottom price pattern. And if we pierce that, then it would suggest that we would continue going higher. So let me just kind of break this down. So I look at things on all kinds of time frames. Really what I'm trying to do is get a sense of where a bigger move is going to happen. I'm not looking for the next 7 pips or the next 32 pips. I'm looking to take 150 pips, 300 pips out of a trade. And it's a little bit different style of trading, but to my mind, it's the only way that you can really make money. You can't make money in and out. And that's not my opinion. You just look at the statistics, especially in the Forex market, where it's estimated that 90% of people are losing their money. I think it's probably more than that. And I think it's because people are trading on too short a time frame and their outcomes are just too small. We talked about that yesterday. An outcome meaning that if you're looking for 15 pips profit, you got to risk 10 or 15 pips on that trade. And that is a 1-to-1 risk reward relationship. So that means you got to win 90% of your trades in order to be successful over time. And who thinks they could win 90% of their trades every day, trading in and out 5 times a day for the next year? The statistics would suggest that you've got a very poor chance of being successful. Instead, what I like to do is wait. And so it takes time for these trades to set up where you can see your way clear to, making these bigger moves. But what I like to do is set up a trade where I have a 3-to-1 risk reward, where, if I'm going to risk 50 pips on a trade, I want to see my way clear to making at least 150 pips. And if you can set up most of your trades with a 3-to-1 risk reward, you can actually lose 72% of your trades. So I could easily lose 5 out of 6 trades and still be a huge winner. Because that 6th trade, could be just a monster. So what we see here, just like the weekly, we see this on the daily. Now it's a little bit early to tell whether this is going to, be this double bottom. But all we can do is look at the patterns and then look at the price action. So as I said, directionally, this has been heading higher. So it's an uptrend. Then we have a double bottom price pattern. And then I wait for a day like today, where I can see a price action that will put me in the momentum of the trade and also help me understand the risk. So that to me is the holy grail of trading. If you can join a trade right where it's, going to get going and also understand where the risk is, you may not be right every time, but that is, the most certainty you can ever expect in trading. So this is what I call my insurance day bar, this key reversal, where you can see today it made a new low. And by the end of the day, the buyers were firmly in control, closed on the high of the day. And so to me, this is a washout day where, they try to push this down and there were no takers. So by kind of going down here, the market has shown me where my risk is. So if I, sneak a stop loss under here, that's basically where my risk would be on this trade. So I would buy it here at 73.87 or what have you. I'd put a, buy stop slightly above today's high, wait for it to confirm. And I would put my sell stop right down there. And we did, risk management. I'll, maybe do that again today, where we have, call it an 85 pip risk for what could be, a several hundred pip reward. So certainly this is your first level of resistance, which is about 80 pips away. And, that would be my first level of resistance. And then I would look for it to go higher. But again, this just is a way to start looking at a method to set up your trades. And then you don't have to watch the 5-minute chart. You basically put your buy stop here, your stop loss there, put an arbitrary take profit. I always start with something away from the market where I don't expect it to get hit the next day. Obviously, if I take out 150 pips tomorrow, I'd be happy about it. But that's how I set up my trade. And then you don't have to watch it. It's really a set and forget. You put your buy stop in there, put your stop loss there, and your take profit. And now you go about the rest of your day. Anybody have any questions on that? So Yannick says, so like I said, I always put my take profit at some arbitrary, area. Could be right at this resistance area. So call it the 76. So if it gets to 76, I would make 220 pips for my 80 pip risk. So roughly a 3-to-1 risk reward. But here's the thing, unlike, expert advisors, which just have these trades set up statically, if this thing started, coming here and looking like it was going to get going, I would, move my take profit. I would keep moving it away. Wouldn't let this thing stop me from making more profit. So, if we looked at the weekly chart, we can see the potential on the weekly. This makes it a little bit smaller. You can't see it, but again, if this thing is going to, be a big mover, just let the trade work. And actually, I would look to actually add on a trade like this. If it started, confirming, and confirming meaning that it would go through this neckline. So this is the first real test. I mean, I usually get in early. I mean, most technicians would say, wait for the confirmation, wait for it to get through this neckline. I will use this day as a way to, get my entry in now. And, usually if you're early on the turn, that's where the big money's made. So to my mind, this would be your first level of resistance, this neckline. Usually, you get this kind of behavior. But if this broke through and then pulled back, I would look to start adding to my position. So what I try and do is try and anticipate bigger moves in the market. And then, look to add to that. And that's how you make, just a huge profit. If you've added, several times during this thing, and now it's up here, that's how you make money in the markets. By just sitting in a nice position and watching it unfold. You don't do it trying to snag 15 pips on some magic moving average crossover on a 15-minute chart. So Yannick said, is it possible to take profit of 74.50? You could. It's a little shy of this thing. I would put it, right up. I would say your take profit is going to be between 74.50 and 74.75 as an initial thrust. But, I wouldn't be too quick. You could take off half your position or what have you. But I always try and get in at the beginning when something's just starting and then look for that pullback and then actually add. So that's my thoughts on Australian versus US. Any questions on this chart? So B said, how many pips away? So typically I just put it at the outside now. When the market closes now, there's a reset. The brokers go through their reset and they widen the stops, widen the bid ask. So usually I send out my email around this time, but you got to be very careful. Wait until about an hour from now, the spreads will start normalizing, and then I would just sneak it in somewhere, over the high here. So let's say it closes 73.81, wait till it normalizes, maybe 73.87. I mean, it basically closed on the high. So there's a good chance you're going to, get stopped into this thing. So I would just put it, like 73.87 and your stop loss right there. And that's your trade. And even if you lose this, if you set up your trades with this kind of risk reward parameters over time, you will win. So Vivian says, we're just under the 200 moving average. I usually wait for a break and a reach. So you can see that I don't have any volume. I don't have any moving average. There's nothing on this chart. There's no moving average. There's no MACD. There's no Bollinger Bands. There's nothing on this thing. I just look at price and time. I just need this picture, this visual. And yes, I'll get in early. I kind of see these patterns. Then I look for a price action. And if I'm wrong, I'm wrong. It's just the way it goes. But, this may take a little while to build away from this. So typically when you kind of go down so strongly, it takes a while for you to kind of build sideways before this thing can find a path to go back from where it came from. But, I just use this key reversal day as a way to set up a risk reward trade. So Quiku says you start on a weekly chart, then a daily. When do you do which? So it's whatever gives you a feeling for context. So I'm trying to find, patterns, and indications of broader moves. So sometimes just the daily chart is enough. When I kind of opened the daily chart, I kind of knew what I wanted to do here. Then I'll go and look at the weekly chart and see what's happening in perspective. You can see that this was an area where there was a lot of support, this 71. So we had this inverted head and shoulders. We pulled back, and you can see that, there's a lot of support at or near the 71. So this is still a little bit of a downtrend. And yes, you may want to wait to, see this retest, but I'm just looking at energy of today's bar to set up a trade going into tomorrow. And like I said, you take a 0.5% risk. We did the risk calculator yesterday, but for example, let's just look at Australian US. So let's say we have whatever, a small account, $1,750 account, doesn't matter the size of your accounts. And you want to risk 0.5%. So 0.5% of your account is expressed as 0.5. And then our stop loss was about 80 pips away, call it 85. You hit calculate. And so this is in mini lots. You could do 1 mini lot and risk $8.75 of your $1,750. And if you want to risk more, it's a dynamic thing. So if you like it, go to 1.5%, what have you, then obviously your lot size is going to be bigger. So Vivian says, where would you put the stop loss? So I told you right under to today's lows. Today's low was, where's Australian? $73.20. So yeah, I mean, that's a 60 pip risk, 67 pip risk. You could buy it at 73.87 and risk till 73.20. And you have a 67 pip risk for what could be a much higher gain. Karina says, does this work for high frequency Forex? I don't know what high frequency that, if you want to trade in and out on a 5-minute chart, you'll see these kind of patterns on a 5-minute chart, but it won't have, as much, you'll see something in 5 minutes, looks like a double top. It goes 3 pips before you can get out. It's right in your face again. So yes, you can trade intraday charts or high frequency or whatever. I use only the daily. I look at the bigger time frames because I'm looking for the bigger moves. I'm not looking for the next 7 pip move in Australian US. So if that's your thing, then maybe this methodology is not going to be, for your cup of tea. So that's my thoughts on, you're welcome, Karina. That's my thoughts on Australian US. So that's the Forex. In terms of stocks, I'm looking at these Chinese stocks. I think they put in an interesting bottom. This is kind of where it gets a little bit interesting in terms of price patterns and price action. And this is where I, run into challenges. So you have to look at, these things are dynamic, right? You'll see patterns in a textbook, and then you'll see it worked out perfectly in the textbook. But the market is dynamic. And so the market will put on these patterns, so here is your head and shoulders right there. Looks just like a man and woman's left shoulder, head, and right shoulder. And so this is a bear price pattern. It's a reversal price pattern. It tells you that prices are going to reverse and go lower. And this pattern did its job. Once it cracked this neckline at 85, this thing went to $60. So it got, cracked 30, 40% from that pattern. But then the market goes to certain things, and now we see the appearance of another pattern. So I'm always looking for the pattern that is going to govern the next decent trajectory, the next 100 days. So you can see that for the next 100 days after that pattern was set, we went lower. Now we see the appearance of this pattern, the double bottom, which is just what it sounds like. Makes a new low, retests the low, and then comes through this neckline. And basically that confirms that there's a bottom in there. So you have this kind of tug of war between two patterns. And now you have to figure out which one is real, which one is governing. And the way we do that is that basically the market tells you, you can see the energy that this is starting to go up. It's starting to suggest that this has bottomed. And so we also see a double bottom and an inverted head and shoulders. And you can see that we're right at, well, we've kind of gone through this first neckline right here. And then the more conservative one is right there at about 84. So this is where I kind of toggle back to the weekly also, kind of look for, which one is ruling. And so this is starting to shape up like a bottoming pattern with the double bottom here and the inverted head and shoulders. And so I just bought it today. I bought the calls earlier today and made some money. And then I laddered out and then got back in and I bought call options, which is just a bet that this thing's going to continue quickly. And so that's on JD. And the weeklies are even more confirming. I put this out last week. This was on my weekly email last Sunday, I believe. Here it was. So here was the entry order for last Sunday. So we closed at what, 80.57. You would have been in on a buy stop at 79.11 with a stop loss up here and a take profit here. And I'll probably move that take profit. And in my email, I basically said JD has formed a classic long-term double bottom, inverted head and shoulders bull price pattern. Penetration above last week's key reversal suggests a high probability of a healthy move higher. So this is what I was looking at on the weekly. So you get different looks, and what you'll notice is that I'm not looking at a 15-minute chart, over the last 6 hours. I'm looking at a lot of history, and basically the history of this chart is higher. Yes, we hit a peak and came off, but this suggests that this was just a pullback in what looks like a an uptrend. But if you look at more and more compressed time frames, you can't see that history. So here's where we see this head and shoulders kick in, and basically did its work. Prices sold off from there, but that looks like it was just a an intermediate or what have you. So one pattern kind of then segues to another, and the market's very dynamic. And that's why you have to be very objective in your analysis. So here on the weekly is the double bottom and the inverted head and shoulders, even supersized more than the daily. And, we just cut through the neckline today. And then, perhaps a more aggressive confirmation would be above 85. And if we start, heading toward 85, it looks like there's a lot of room to run back up into this white space. So what I like to do is identify these big monster patterns, get into a trade, and then let it launch itself. And what I like about this is not only do we see the double bottom inverted head and shoulders price pattern, but if I look within the pattern to what I call the price action confirms the patterns. So sometimes we see certain shapes, but the price to me, so you can see all of this, made a new low, close on the high, made a new low, close on the high, made a new low, closed on the huge high. And then last week, it did the same, made a new low and closed on the high. So you can see last week, they sold it off monster. And then by the end of the week, the buyers were way in control. So it starts telling you, the market actually, when I see these key reversals, they actually point in the direction that the market wants to go. You don't have to be a genius. You don't have to be, you have an MIT, economics degree to understand this. Just visually, the market actually starts pointing in the direction it wants to go. So I see the combination of the patterns and the price action, and all of this is suggesting this thing looks like it's ready to go a lot higher. So Dan says, how do you stay in a trade if it moves sideways for a long time? You have to trust the pattern. It's just, you have to, so even if this, started going like this, and this is a weekly chart. So let's say for the next 8 weeks, it just did this. I would still be looking at that. And so, you have to trust the pattern. And, that's the thing. The market will do a great job of shaking you out of any trade you're looking at. If you're looking at shorter time frames. And this is what I like about looking at these longer, the weekly chart. You can see if I looked at this on a 5-minute chart, it would look very different. So the weekly charts start smoothing this out. So if I came to 5-minute chart, this is what a 5-minute chart on JD looks like, a freaking heart attack. That's a 1-minute chart actually. But, if you look at the longer time frames, so look, it's, went up, went down, went down, went up, double topped. Now you think it's a double top, went down. And so if you're looking at short-term charts, there's just no way you can stay in a trade. So by stepping back and looking at the forest from the trees, I can see what's happening here. But, if you're going to trade, so this is just today, up, down, all over the place. And so very difficult to stay objective or have any idea of where this is going. So there's no way that I would have the confidence in laying out the strategy for JD looking at this chart. I mean, yeah, it could go up from here, but how far? Take a profit and another dollar from here. I think this thing could go up, to the moon here, based on what this is looking at. You can't see that on a 5-minute chart. So if you're in a trade to move sideways for 8 weeks, then you're holding up capital if you have limited dollars. That is the push and pull of trading, right? So you have to figure out, okay, where do I allocate? And yes, if it goes sideways, there is that push and pull. But, if something is building for a, huge push, then, you have to make that determination. But I'm giving you the tools to size up trades, how you do it, which trades you look at. There's an opportunity cost for everything. But, by slowing it down, but this also means, so that, by definition also means that you're going to be trading more selectively, less often. So yeah, it sounds a lot less fun. You rather than mixing it up, 5-10 times a day. Let me ask you, who asked? Dan Schwartz asked me this. So let me ask you, Dan, how successful are you, getting in and out of options? I mean, getting in and out of trades every day. So it's fun. It's more activity. It's more engaging, but I set up trades where I look for big moves. And those moves could come in 3 days. I mean, I made 7 figures in BYND in 3 days. So, how these trades work out. So in this move right here, where it came from here and jumped there, I got long these call options and made just a bunch of dough. But now, I bought some put options here. I'm losing money. But I think if you're patient with the stock, eventually this thing's gonna, come down. But, by now you could just wait for some kind of reversal or some, trading action that then puts you back in the direction when this thing wants to turn lower. So yes, sometimes you tie up capital. So Anthony says, do you tend to go out of the money when buying options? Yes, typically. Today, I actually bought JD in the money options. JD was trading at about 80.20 when I bought the 80 call options. So the market was about 20 cents, in the money. But then I made a bunch of money on those. and got out, and then I bought some out of the money calls on the close. Antonio says, if the market moves in favor of my trade, at what point in time should I reload with more positions, always keeping the previous ones open? So basically, I just look at all of the tools. So for instance, this trade, BYND, I've been telling our members to short this thing forever. So if you started here with this pattern right here, it started to crash out of here. So if you got in at 130, then there's all kinds of opportunities where the market kind of gives you another pattern where you have, another double top lower. So you have this pattern here, and then also this price action where within that top made a new high, close on the low, made a new high, close on the low. So once I'm in a trade, then I look for, a key reversal bar like this. And then I would just put a sell stop under that bar and add to my trade. And then the market goes into a sideways consolidation. And then I put my sell stop underneath this. And, this is what I did last week when the market kind of looked like it bottomed. I just think that this is such a big downtrend that any kind of up move, I just sell into that. So right when it was going higher last week, I just bought these 110 put options when the market was trading at 114. And by the end of the week, it closed at 105, and I made 500% on those options. So so what I would do is I would wait for a day now where the market says does something like that, or does a combination where it looks like it stopped going up, and now I can find a level where I can rejoin this trend and understand where my risk is. So basically it all starts with what is this chart doing? What does it say? Yes, it's just been grinding off the bottom here, but if you look in perspective, all it's doing is just finding support at this this lower level here. I don't think that support is going to last long. So to me, I look at the patterns and the trend. So you've got all of these bearish price patterns, and basically prices have gone from $200 to $100. So we're in a profound downtrend. So you mainly want to trade with the trend. There are times like I did where you go what's called counter trend. And I'll have very different objectives for a counter trend trade than a trend trade. And so again, I would just look for when this thing's ready to tell me that it's, ready to go down again. And then I'm get back in sync with that. So you can see these trend lines are pretty arbitrary, but we're getting coiled up in an area where, I don't think that this will find support for too long at this 100. And then it's just literally on a ledge. Once it pokes its nose at 100, there's just nothing to stop it. So Greg says, programmers and algos are targeting few key areas. Do you just stay with the price and the pattern, nothing else? So this is all I look at. This is all I look at. And yes, I'm aware that there are, key levels, that when the market gets to key levels, it will likely, stop and I digest it. And then I have to, kind of figure out how long and, how likely is it that we're going to get a bounce and, a lot of those things. But this is what I like about this pattern is that it's very mature. This thing is, looks like it's ready to go. Nice pattern. Now, when things look so perfect and then it doesn't go according to plan, that also sets my antenna. So to me, you have all of those bear price patterns, the double top, the head and shoulders, and you basically confirmed it. You confirmed that head and shoulders by going through this 113 neckline, which has been basically ruling this for quite some time. So now all you're doing is, hugging this secondary support level at 100. So it could continue banging through here, but to my mind, it can run, but it can't hide. And I think that's eventually what you're going to see. But look, things, grab a foothold. And if this thing starts, getting on a life of its own, if something doesn't act, if a market, I just showed you JD where we had one, head and shoulders that dropped. Then we started doing the double bottom inverted head and shoulders, and one pattern turned into another. Now, this hasn't dropped enough for it to turn into another pattern to go the other way. So I still feel very strongly that this ultimately should go back. But if it doesn't, that starts. So right in this area, when it broke here, I thought this was the time where, we were looking at a major break of the stock. And we got this break, and then it kind of hung out here. And when it snapped back above here, I go, there's something wrong with this picture. What doesn't go down is going to go up. So I just surrendered to that. I bought call options. I made a whole bunch of money on that quick up move. So I still think that, very soon that this thing is likely to go back lower. So yeah, I don't look at fib patterns. I don't look at ticks. I don't look at algos. Yes, I'm very cognizant of certain levels, but those levels get taken out. So that's basically, what I'm looking at. These Chinese stocks, all of them are starting to turn around. I started alerting our members, to an oversold condition in BABA a while ago, BABA. And again, this is pretty subtle. We're right in here is this funky little double bottom. Like I said, these bottoms can be asymmetric, where, one low is a little higher than the other. But when you look back, there's your double bottom. And, how long this lasts for, hard to tell. But what I look for is, what I also say is that these reversals, not all reversals are created equal. So 2 days ago, made a new high, closed on the low. So typically when I see these, what usually follows is a downtrend. But now I think this thing's turned around. So now I kind of look and see, how does the price act at this reversal? And you can see it went down a little bit yesterday, but then there was no follow through. So typically, if this is good, it should have gone like that. But instead today, so instead of going down, we're just, consolidating this thing. It didn't push this thing lower. So now you've kind of got this two-day inside day bar coil. So the last 2 days have kind of been within the range of that third day. And so, you could just sneak a buy stop in here and a sell stop there. And that's how I would, trade this thing. And who knows, it could just come out of here like a bat out of hell tomorrow. So today's range in BABA was, where's this thing here? 168.27, call it, and 163.60. So about a $4.50 risk. So basically I would buy it here on a new high, 128, 168.40, put a sell stop 163.60, risk $5, and you could have a nice trade there. So Joe says this still is a lower low. It doesn't matter where the lows are. It doesn't have to be symmetrical. So you can have patterns where, the bottom looks like this, or the bottom that looks like this. conversely, same thing with this double top. You can have a top that looks like this. That's what Beyond Meat did. And I knew it was making a top when it was making that second top. I was buying put options as it was making that second top around 175 bucks. And I made about 60 grand in about, I don't know, 24 hours. Or it can look like this. But when we look back, it just looks like that M top configuration. And so here you kind of have this, kind of looks like this. Or actually, no, it doesn't. It looks, so either way, prices are not perfect. Here you see a double top right here. And the two tops were not in the same area, but that was a top. Here was the head and shoulders. So you see these patterns all the time. Here was another head and shoulders. And so this is still a downtrend. It's going to be interesting to see what we do here. I think we still got just another push out of here. It could happen very quickly. I like JD of all of them. You've got PDD, Pinduo Duo. Also kind of got a double bottom down here also. Again, I think JD looks a little bit more robust. So this to me is also a conflict where you get this giant head and shoulders, which seems like that's dictating. You see, in here is this bottom, and don't quite know if this is going to turn out to be a bottom. We'll see. If we start coming above these highs at 110, this will be like a cup and handle. So the market puts all kinds of patterns, all kinds of price action, and so Anthony says, with all the chatter about general market reversals, how do you manage that noise? And that's, well, you don't listen to chatter. Don't listen to, the only thing that you should listen to is the market. Turn everything off. Turn your friends off. Don't hang around in internet forums and just look at what the market is telling you. And the market is, pretty tough right now, the stock market. Yes, there's a lot of ruminations about reversals and what have you, but you have to just look and see what the market tells you. So this is the QQQs, which are a proxy for the NASDAQ. So if you want to buy a diversified portfolio in the NASDAQ, you buy the QQQs. If you want to short it, I typically buy the puts. So you can see that it's been in a huge up market. And during this up market, there were all kinds of times. I mean, right here at this apex, I start buying puts in anticipation of a down move. I think I showed that to you yesterday. You saw double top here. You had a head and shoulders. You had all of these bear price patterns converging and telling you this was going to go. You also had this island top here. There was 5 different price patterns that were coming together here that suggested that this was going to move lower. And, I bet big. I bought some out of the money put options when this was trading at about 334 on the Qs. I bought the 320 puts right there. So the strike was there, and you can see it came right under there, went to about 310. I made a sizable amount. I bought these options at $1 and they went to 10. But the point is that you see these bear patterns all the time, and then, they go and then they break. So this is what I call a busted pattern. So if this was a true head and shoulders, then it would have followed through. It would have broken, and then that's what I would have expected. But once it starts breaking, then breaks the implications of that pattern. And now I understand that's what I call a busted pattern, and I'll just simply do the opposite. And you saw the same thing here. We had a double top, Now, if that was a true double top, that's what should have transpired. But what happened was, we broke for a little bit, then we put a double bottom here, and then this started busting this pattern. So even though I see what looks to be a head and shoulders in here, it hasn't really confirmed yet. It would have to go through here to confirm. So right now, everything is noise. You can see that we went down 4 days in a row, and I kind of was very skeptical that this was going to keep dripping down. And it also, like I said yesterday, got very messy. When you have previous price history, the market always finds, it's very difficult just to cut through history that has just occurred. So again, these are somewhat advanced concepts. I'm throwing a lot at you guys, but this is how I look at the market, entirely through the prism of this picture. And I just look and see how prices dance around the unchanged level. And so Yannick says, is the earnings not relevant? No, earnings are very relevant. But to my mind, earnings typically send the stock where it's already going to go. So I bet on earnings all the time. Here's some profits from this Wix company. And, that's what happens. I see these positions right there. So I'll look for companies that are about to announce earnings, and I'll look at the prior setups, the prior trading action. So to my mind, the earnings should just send the stock to where it's already going to go. So you can see that on this particular company, I sold short at 261.5, and I usually do this like 5 minutes before the close. And then when it opened, I got out, early. I got out as it opened because it can do anything after it opens. And I bagged like $25. I could have made a lot more, but I made $54,000 in literally probably 6 minutes, where I did this 5 minutes before the close, and I banged out of this right on the opening and bagged $50,000. So this was Oxygen, the OCGN, the stock that I just showed you. I was playing the earnings a couple of weeks ago, and bagged about 80 grand on this, made 55,000 in this account, and I was up 33 on that. So I made about 80 grand on OCGN on an earnings play. So let me just kind of see if I can find, sorry, these are old trades. I'm just trying to go through. Same thing with Stitch Fix, SFIX. I remember this trade, even though it was a while ago. Again, I was looking at the patterns. I saw the double top. Here was the key reversal. So right on the close, I kind of bet that reversal, that pattern, that the stock was going to head lower after earnings. I shorted 5,500 shares at $68.75, and bagged about $73,000 when this thing opened, $25 lower. So this is the power of just looking, and I don't know what the earnings are going to be. I'm not in touch with the CEO and all these different companies, and so I just look at to me, price, the setup. The earnings should just go in the direction, or whatever it is. Even if the earnings came out well, sometimes the earnings come out better than expected, but then the projections or something are amiss, and the prior pattern will inform you of that. So I bet on earnings. I bet on pre-opening trades. So very often, and this is what I started this opening session that we do in the mornings called the Boiler Room. This is a stock in CrowdStrike, CRWD. So very often, in the pre-market session, you'll get prices that you won't even see in the regular market. And so I start looking at these things, and you can actually bet on stocks before the market opens and after. I bought OCGN tonight. So on this particular trade, at this particular time, this was one of the biggest gifts, and sometimes the markets will just give you these gifts. But so right here, to my mind, was just a huge double bottom. And then you can see the market came back. And to my mind, these are just opportunities. Once I understand something's bottomed, this to me is an opportunity. And if, the stock right now is up there, CRWD. But at this particular time, I saw this little double bottom, actually this little inverted head and shoulders. And I made up my mind that night that I was going to buy this thing. If it opened here, if it opened here, I was going to buy it wherever it opened. But on that particular day, the stock market was down 500 Dow Jones, and I think the Qs came in 600 lower. And this stock opened $8 lower. And so to me, there's a certain aesthetics to, charts. They don't, something just doesn't open here, cut through all of this price action and, go through here. So I knew there was almost zero chance, given all these bull price patterns and where the stock was, so this was just a bargain to buy it down there. Literally you could have put a stop loss under the previous day's low. This thing didn't go $2 lower after I got in. And it's up $70 from there. So I bought that thing $8 lower, and it closed up about $9 for the day. And I just bought a monster amount and just made so again, I just use price action. So there it is, about 9,000 shares, and you can see I was up 53 grand. So it was up $6 from where I bought it. And that trade is, well up from there. Yes, I'm still holding Tesla long. Is it possible to make a video on your YouTube how you exactly look at the earnings? So Yannick, I look at earnings just like I look at everything else that I've been telling you. I look at the setup and make a determination on the setup, if I'm going to make a play in that particular thing. And so I have to see that there's, some setup. I was looking at TSM. I actually bought some puts today. I have a feeling I'm going to lose on this. It looks bearish, but it's right in a support area. And I think I'm probably going to get I bought some put options today. TSM is going to announce earnings tomorrow morning. And this does look bearish, but it, just like Beyond Meat and certain things, it's sitting right on a ledge. So you have what looks to be a very bearish price pattern. So you have kind of the head and shoulders, and you have this huge descending wedge. So to me, this thing should resolve itself, even if it's going to go higher, but it's at this area where there is this guy that's guarding it. So you can see all of these key reversals at this area. So it could actually turn out to be a pretty good buying opportunity here. And I didn't really feel good about that. I bought some puts, but I feel like I'm going to get my lunch cleaned. We'll see what happens there, but this does look bearish to me. But there's all kinds of support too. So, we'll see. So I did make this play for tomorrow morning. You can see even on the weekly, we've got this, but this is where, again, you look at the pattern and then you look at how the market plays within the pattern. So this descending triangle should, to my mind, go this way. But on the other hand, if we start going that way, then it would bust that implication. And just like we saw with dollar yen was in this long-term descending triangle until it bust out the other side. So these triangles can be a reversal. In this case, leading up to the triangle was an up market, and a reversal would turn this down. Or it could be a continuation of this uptrend. But by virtue of the multiple times that this is hit, I do think that we're eventually going to go lower. So I bought some put options on TSM. And so that's exactly the analysis that I go through. Joe says, do you not look at volatility? No, I just look at this picture. I mean, I see all the trap doors. Typically, I only do earnings if I see a kind of a clean play. And I did this anyways. Sometimes I lose my discipline. I like to have fun too. And even if I lose money, what I love about these earnings plays is that you get an immediate result. Like tomorrow morning, I'll know exactly whether I'm right or wrong. But I basically played this earnings play short, and sometimes you can be wrong initially and then right. So I shorted this stock right here before earnings, and you can see it went way up against me, but now it's coming back to where I got in. So earnings can do everything, and so very, very volatile, very, very risky. This was Helen of Troy, and it just looked like this was in a bit of a downtrend, and you can see earnings just sent this thing, and that's what earnings can do. It just can send prices like a kid with a crayon anywhere. So you got to be very careful. So Joe says earnings always drop in the day of. Well, drop or go higher. So TSM will announce earnings before tomorrow's opening. So we don't know what they are tonight. They'll announce it before the opening of regular market session tomorrow. All right, so I think I'm going to end it there. I'm going to share a link, or Dwight, I don't know if you want to do that. Share a link to my book, and my book will basically tell you guys in more detail my 5-step trade execution plan. So here's the link. I think Dwight put it in there. And so the nice thing is that this is a pay what you want. So you can see there's a pay what you want button. And so whatever you decide, the value of this information, you basically click this button and choose your price, $5, $20, whatever it is. But you'll know that whatever you decide to pay, I will double that and donate it to the American Childhood Cancer Organization. So I've donated over $35,000 to this great organization. So all the proceeds from all of my book royalties, not only do I not get a dime, I take double that amount and then make a personal donation to the American Childhood Cancer Organization. So you get great information, and you also know that your money is being going toward a great charity. Vivian said, is this a PDF? Yes, it is. John says, thanks for your time. Great as always. Thanks, John. You're always a very loyal supporter, so I appreciate it. John says, thanks, Mark. Another great session, so I appreciate that. So I'll take 1 or 2 questions, but that's how I look at markets on a continuous basis. Any other questions? Let me see if I'm missing anything. Dwight, is there anything on YouTube?
No questions on YouTube.
B says the key reversal bar, does it have to be bullish to be a buy? No, a key reversal can come in various forms. Let me just find a good example of that. So to me, a key reversal points in the direction a market wants to take, but it has to be in context. It can't be in a vacuum. You just see a reversal and you trade based on that reversal. So a key reversal simply means a market goes to one level and then closes at the other end of the level, somewhere toward the opposite end in the lower quadrant or what have you. So in this case, market made a new high, closed on the low. And, sometimes it directs which way this thing wants to go. So you can see this thing made a key reversal. Now, I pay attention to these things, especially after a good run up. Now, again, not all reversals are created equal. And like I said, with BABA, the interesting thing with BABA is that, we made this reversal, 2 days ago. Then yesterday we did this. And then, today we're here. So it's a question of how the market greets this reversal. So you can see that there was a very robust move after that reversal, and that pointed, in the direction this market wanted to go after that. A key reversal can also be a move to the upside. So it can make a new low and close on the high. And you can see there were two key reversals right here. So it had a double bottom. And then it was confirmed to me by this price action. Made a new low, closed on the high, made a new low, closed on the high. Even though this was red, it closed much closer to the high than the low. And so the combination of the double bottom and the price action told me that this thing was going to go higher. So this is, an example of, and here was another example of a key reversal right in this area. So effectively you had this double top, and then you had these two reversals where this closed on the low and then did the same thing and put you into a pretty good trade. So, right buried in here is a bit of a reversal. Now, this is a kind of a stealth trading market. I do think pound New Zealand will trade higher, but it's been a pain in the ass to trade. So that is an example of reversals. You're welcome, Karina. Good luck with your doctor. Thank you very much.
Hey, Mark. Ivan is asking, what do you think about trailing stops in that strategy? Do you suggest to go after some level of price?
So, you can, use trailing stops in a market that, is going higher. It's the idea of stops is a difficult one because every trade is different. My objective on every trade is going to be different. Sometimes I'll just see a move that could happen over the short term, couple of days. Sometimes I'll see a weekly double bottom like this and know that that's probably a bottom that's going to be there for months and probably years. I think that is a bottom. You won't see that again. So now if my whole viewpoint on this market that is going to go higher over time, I'm not going to put a stop so close to, squelch off the opportunity. But, on the other hand, if this thing starts getting going, I might put something behind there. You can see that I had no stops on these dollar yens. To me, stops are, they're effective, but it really depends on what you're looking at for a trade. So yes, you can obviously use trailing stops once the trade starts going, but most people will, see like 150. So for instance here, and this is the frustration. Sometimes these things just take time. So here's the double bottom, and then the market actually moves higher out of here. And then you put your stop too close, and now you're taken out of the thing before it takes out again. So it's a bit tricky, the idea of stops. It's a whole other discussion. Sometimes it's really clean where it just gets up and goes, and then you can just manage it differently. So yeah, there are many permutations and ways you can, but to me, the first thing is deciding on what this thing represents. Is it going up? Is it going down? What is the size of the pattern? What does the magnitude of the move look like? And then based on all of those things, I'll make different judgments. Milan says, is there a particular time of day you spend more time to look at the charts? Really around the close. So to me, it's really important how something closes relative to the high or the low. During the day, it's just a gamble. Prices can go all over the place. And so I will really look, today, like the S&P was going lower, the Dow was going lower. That was midday. By the end of the day, they closed on the high of the day. Now, I still don't know what that really represents. It's still a tricky area. Again, all these key reversals are not created equal. But you can see we were down, at one portion of the day. By the end of the day, we closed higher. So now my whole, way of looking at this thing, and again, this is just a tremendous area of support in here. So it's not surprising that we turned around here because you have another double bottom and key reversals all in this area. So this is an area of massive support. And so tomorrow is going to be very interesting as to whether we continue or we fail. So certain reversals look like a reversal, but if they fail, that would also inform me of certain things. So I just look at how things close. This has kind of got lower highs. So while this does look like a double bottom, it would have to, take this out. And, this could be a setup where maybe it's ready to do that. So it's very tricky in here. I've been saying all week that, this is just a gamble in here. These, it's just between here and here, it can do anything, and it has. But I watch on how something closes relative to the high and low. I bought that stock, OCGN, just because it had this inside bar, and this inside bar, is typically, coiling of energy, and then the energy usually, unleashes. And so I'm just looking for momentum. It was just it's a crazy trade, this. So I think I'm going to leave it there. Take a look at my book. That should answer a lot of your questions, but it doesn't matter what the chart is. This is a crazy chart, and I just see all of this kind of. This is not, really something that would conform to my analysis. I'm just looking at this inside bar right here. So these just to me are coils. So you can see we had a giant washout today, and it closed on the high of the day. And so this is an inside bar where literally the range today from low to high sat within the range of the previous day. So to me, this is just a coil, but it looks like the momentum, is unleashing. And sometimes come in the morning, this thing could be $15 higher, or $4 higher, or what have you. So I'm just looking for a momentum play on this thing. I don't know what this thing really is. I don't really typically trade charts or markets like this. I just looked at this as a kind of a momentum. I'm trying to find a better idea of something that closes in a certain way that then so this is what I'll do. I'll do it I'll do my analysis so you can see this. This is snow. Has an inverted head and shoulders, and now breaking through and probably likely to be a buy into. So this has, a ton of patterns in here. And it all starts off with this bigger pattern, just like the Australian dollar versus US dollar. Looks like a giant inverted head and shoulders. And then you had a little bit of a sell-off. You put on another double bottom, an inverted head and shoulders, and now you're ready to levitate again. So I go through market after market, and initially I was shorting this because I saw this as a double top here. And then I saw these key reversals, this double top, and I was shorting it. And those patterns did its job. It dropped from 320 all the way to 180. So, those initial bear patterns, and then it started turning this U-boat around and put on an opposite pattern. So, certain patterns, give way and beget different patterns. And that is just how I look at markets. They're very fluid, and they all, to my mind, something always, creates a pattern. A pattern usually precedes a move. Yes, we can look at this, just arbitrarily, but there's always a pattern that precedes that move. This double bottom preceded what looks to be, going to be a smoking move to the upside here. All right, guys, I'm going to leave it there. I could be on all day. There's a million, charts out there we could look at, but that's all of it in a nutshell. Pattern, price action, layer it with a trade execution plan, understand where your risk is. And if you do this on an extended period, you will make money. But if you try and trade, $2 moves out of, areas like that, probably not going to be successful over the long run. So somebody asked, well, if you just sit in this thing, and you bought it, and, you got to incur all of this opportunity cost before it goes. And yeah, that is that's the push and pull of trading. So, but what I try and do is look for fertile areas where, areas start getting to things where you can understand them and the risk reward becomes less and less, and the moves, now become much more dynamic. So this is likely to be, a great move into tomorrow, SNOW. All right, guys, thank you very much. Check out the book, and I'll see you tomorrow at 4:30 Eastern Standard Time. Thanks, Dwight.
All right, Mark.
Yes,
See you
sir,
tomorrow.
you're welcome. Ravik, you're welcome. Thank you. Wisla, you're welcome.